This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We're coming to you after a midweek holiday, Wednesday morning today. We're coming to you from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. With me, my colleagues Sonia and Nigel. Guys, hi, good morning.
Hi, good morning, Prashant. Good morning, Nigel. Well, after that big sell-off that we saw on Monday, hopefully there'll be a bit of a bounce today, considering that global cues are not too bad. But let's see which way it goes, because Monday was quite a grave picture for the bulls.
Well, it was a shakeout, so we need to see whether or not it was a shakeout for a day, or are we in for more pain, particularly from the broader markets. But a so-called wake-up call, I think, for the Indian equities.
Well, the alarm went out pretty loud, right? And it just rang out. Let's quickly start with what you need to know as we kick off another session. And I'll start with, we know where we left off on Monday, right? I mean, it was down and out, it was complete bloodbath. I'll get to that in just a bit. But start with something positive. Now, US data has come in better than expectations. I'm talking about the US PMI numbers, both manufacturing and services. And that's important. I'll tell you why. Both the numbers, by the way, surpassed 50. Actually, 51 for the services number, the manufacturing at about 50. For consensus expectations were that these would be below 50, both the manufacturing and the services number. And what does this kind of reinforce? It kind of, if you just contrast this US PMI numbers as against the European PMI numbers we've gotten across countries over the last couple of days, it tells you the theme of US exceptionalism, right? I mean, the fact that the US is, doing better than most other parts of the world on the developed side, perhaps that stays very, very strong once again. We've got to deal with 2 days worth of data. So, begin with the US 10-year. The US 10-year yield, which on Monday during sort of Asian hours while we were trading, it hit 5%. It's now back to 4.82. These are wild movements on the bond market that we're seeing. So last week, not this week, but the last week, Friday to Friday, the bond yields had gone up 30 basis points. The big week before that, yields had fallen 18 basis points. And, in 2 days, we've lost about almost 20 basis points here on the 10-year yield. It is just profit-taking, or perhaps, there is more here on the way down for yields and higher for bond prices. People like Bill Ackman, etc., who've publicly said that they've covered their bond shorts, do believe the latter, not the former. But we'll see. I mean, that is one individual, large investor, influential investor, but we'll have to see. Equities, last 2 days change is positive. The S&P is up about 0.5%. The NASDAQ is up a little better. It's up about 1.2% or so. That's the 2-day change. The dollar index is back at about 106.24. It was around the 105 levels when we kind of left off on Monday. We've come up a little bit. Now, come to the market here, which I think is the real deal. The point is, all of this doesn't really change the narrative one way or the other, shift things meaningfully for the Indian market. I'm talking about the global cues. They're a little bit here, a little bit there, but nothing very decisive that you can take away one way or the other. We saw meaningful selling in broader markets. We got the mid-cap index, which lost 3%. The small-cap index was down almost 4% or so. It's quite incredible that on the small-cap index, the low that we made on Monday was the same. I mean, it was pretty much the similar low as compared to the 12th of September, when we had a 4% fall as well. So we're basically back at those levels. Mid-cap index is a little different. I would say that just looking at purely very simple things like the relative strength index, etc., not so much for the broader market, but for the Nifty, which also lost about 1.5% or so, markets are quite oversold. So a bounce is due, but I would say that this is going to be more tactical, and you'd be better off just waiting this one out. I mean, I think before I came in, I looked at the GIFT Nifty that was indicating a 40-50 point higher start, but we'll see. But a bounce is due, a tactical bounce is due, because markets are oversold. Supports for the Nifty come in at about 19,200, which is the August lows. We're very close. I mean, 80 points away for the Nifty on the lows there, 19,200 or so. Below that, the next big support area comes all the way down to about 18,500. And, many like Lawrence Belanco, etc., who joined us on Monday morning are saying that perhaps, we'll see a break at that 19,000 level as well, and perhaps a little overstretched. So we'll see. That is basically, where the Nifty consolidated in the month of June. Resistance, very simply, is the 200-day, which is now at about 19,630. The Bank Nifty closed almost at the 200-day moving average on Monday, which is 43,194. We left off at 43,151. So will that come into play? But I think on the lower side, which I think is going to be more relevant, the next support comes in only at about 42,300 or so, and we can go into details here. Again, 4-5% or so from here on the Nifty Bank till the time that you hit another big support level. But I think, after that big crack on the 12th of September, the market kind of held on. It didn't, especially the broader markets, although many like Lawrence, etc., were saying that, this is significant and the markets will pay attention and we will drop off. It did not happen. And we've gotten hit again, once again. And of course, going into things like the end of the year, which is not bad historically for markets around the world, but also the local election cycle, etc., I think, it'll be headline heavy in that sense. So, expect a bounce, but as I said, a tactical bounce, which more likely than not, which at some point will get sold into. It's not a big bounce, by the way, just a 40-odd point start for an index at 19,300. It's, I would say, very, very marginal right now. Sonia.
Absolutely. I think the writing is on the wall, right? This is a sell-on rally market, as has been the case for the last few days. Whether you call it global challenges, whether you call it some redemptions from our own markets as well, this is definitely a sell-on rally market. So today you have positive cues, decent cues coming in. The Dow is up about 200 points overnight. There were some strong cues that you had in terms of earnings as well. Microsoft reported their numbers, which was better than what the street was estimating. Although on the flip side, Alphabet was down about 6% after its cloud business missed street estimates. So some hits, some misses on Wall Street in terms of earnings action. But for our own markets, we couldn't even hang on to that 19,300 mark. We're sitting at a 2-month low, and there was some heavy selling pressure that we saw on Monday. The BSE companies together, the market cap was erased by nearly 8 lakh crores on Monday itself. So, that sell-on rally is something that can continue. There is definitely a lot of caution on the street. However, there was buying action. So DI has bought quite a bit, over 1,100 crores in the cash markets. FIs as well bought about 250 odd crores. Now, a couple of things to watch out for. Today, post-market hours, you have two heavyweights coming out with numbers. There's Axis Bank, there's Tech Mahindra. There's also Jubilant Foods that comes out with numbers through the course of the day. Tomorrow you have a couple of other numbers like Asian Paints, and then on Friday is the big day. There's Maruti, there's Reliance Industries. So all eyes will be on that. But by the way, there's that Eminem song, "Look Who's Back, Back Again." Look who's back, Bitcoin in a big way, right?
Big jump is what we saw.
Big jump, 7% higher on Bitcoin overnight. And I think it's now at $35,000 yet again, the first time since 2022. So gold has come back, Bitcoin has come back, and risky assets under a bit of pressure. I guess that's where we are at.
Well, that's right. For the Indian markets, the Nifty has been on a 4-session losing streak. And in 4 sessions, we've lost around 530 points odd. So I just want to put on board first a couple of positives. One is that the US yield, that's cooled off a little bit. It's cooled off to around 4.82%. The other factor is Brent crude prices. It was hovering around $94 per barrel. 10 sessions or so ago, it was more than $96 per barrel. Now, that's cooled down to around $88. From an India perspective, that's positive. So those are two positive global cues that have come on board. Now, what's the reason for Monday's fall? One is institutional activity was relatively low. So it appears there were more large HNIs or, domestic market players that did sell, and the institutional participation was relatively lower. The second factor is if you pull up the intraday chart, and you pull up the Nifty as well as the Nifty Financial Services Index, in the last 60 minutes, that's when the Nifty Financial Services Index did take a sharp drop. And that perfectly coincides with Nifty's fall. So part of the fall was the Nifty Financial Services, which has an overlap with the Nifty Bank. So that as well did come in for some selling. Can the Nifty Financial Services Index unwind some of what we saw because it was weekly expiry? Well, that'll be one of the triggers to track today. For starters, we're likely to open up with a gain of around 40 points odd. Building on to those gains are going to be very, very important. So what are the key factors that you need to track for today? One is the IT index could support. The US bond yields have cooled off. The Nasdaq has seen a good run in the last 2 sessions that we were closed. For the 2 sessions that we didn't react to. So the IT index could support. The Nifty Bank, that plays out its weekly expiry today. and it's hovering around the 200 DMA. So you wanted to get a little above that and try to trend a little bit higher because it's at a crucial technical support zone. And the broader markets, well, that's going to be very, very important because that was under immense pressure. The advanced decline ratio tells you the picture. In the last 10 months, we haven't had a day when you saw just one stock that was advancing for more than 10 stocks that were declining. So if you weren't careful till now, well, you'll want to be very, very careful with regard to what you're buying. And, you could also look out for good quality names from the broader markets that will do well. But you need to be far more selective now in comparison to what you were doing, say, a month or so ago. The technical indicators as well should come up for you on the screen. The FI net short positions have gone to around 90,000. We have seen in the past when it goes to around 100,000 odd, we do get a bit of a bounce. The second factor is the Nifty PCR ratio. That's come down to around 0.7. When it goes to around 0.65, 0.7, those two technical indicators are going to be important because at times they do play out. When it gets stretched on either side, that's when we see a bit of a bounce. So that's something that we'll track. Let's get to the levels then. On the Nifty, support comes in at the swing low. That's the low that we saw in August, 19,230. Important support zone. The resistance comes in at around 19,400 because you have the 100 DMA out there. And the 19,400 call was seeing writing. The premium there was around 40 rupees. So 19,400, 19,450. The bears believe that they've got this covered. The Nifty Bank, as I said earlier, the 200 DMA becomes extremely crucial. We're hovering around that mark. So the GIFT Nifty starts off in the green. You'll want to build on from there. Want the Nifty to go towards the 19,400, 19,450. And given the current positioning, we could be in for a bit of a bounce from those levels. But the Nifty Bank holds key yet again.
Oh, absolutely. The Nifty Bank holds key. If you look at the last 5 trading sessions, right, the Nifty has lost 540 points. And at the same time, you've seen risk-free assets. So like something like a gold is sitting at almost record highs, almost back at $2,000 an ounce. So that's where we're at the moment. But let's kickstart the show without wasting any time and tell you what's lined up in the first half hour. We'll get you updates from the markets across the globe. Harold Vanderlind of HSBC will join in to discuss the global trade setup. Later, our research team will bring you CNBC-TV18's top 10 stocks for the day. At 8:30, we'll do a fundamental stock analysis with Devin Choksi of DR Choksi FinServ, and lots more coming up through the course of the day. But on the equities front, first up, we have Amit Sachdeva of HSBC, who says that Indian equities are under pressure as FIIs have turned net sellers due to a sharp jump in US bond yields. He says their analysis of 21 similar episodes since 2001 suggests an impact on FII flows is short-lived. He says the geopolitical risk is the key unknown, but if contained, FII flows could rebound as growth stands out and valuations are attractive.
Okay, well, let's get you some money market views now. This is Kunal Sudani of Shinhan Bank, who says that the US PMI exceeded expectations and highlighted the divergence between the US economy and others, indicating that the fundamentals still favor the US economy. Bond yields cooled off, but the escalating geopolitical tensions between Israel and Hamas needs to be watched closely. For the USD INR, he says 82.9 to $1 acts as a support, while 83.2 to $1 is a resistance.
All right, and on the bonds now, Neeraj Gambhir of Axis Bank says bond yields have remained elevated as market has been concerned about the size and timing of the open market operations by the RBI. He says the US 10-year yield reaching 5%, a level not seen since 2007. Ongoing conflicts in West Asia and higher crude oil prices have been other crucial factors affecting market sentiment. He says as the higher for longer narrative continues to take hold globally, he expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.40% in the near term.
Well, we've got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. But for the time being, let's run you through the list. We're looking at Torrent Pharma, BNB Housing, Delta Corp, Kaya, KRBL, L&T Foods. You have Keval Kiran. They are all stocks on the positive news flow. While on the flip side, you have Vedanta, SBI Cards, and Mahindra Logistics that will be reacting to negative news flow.
Okay, well, that's what's lined up here as we go forward. Harold Vanderlinde is head of Asia Equity Strategy at HSBC. Harold, it's always a pleasure to welcome you on the program here on CNBC-TV18. Thanks very much for your time. So where do we start, Harold? What part of the market should we poke at first? Should we start with what's happening with yields? So 30 basis point rally, 5% hit on Monday, back at about 4.82. What's your sense? Where are we headed on the US 10-year?
I think you're right. We have to start about yields. I think a lot of what's driving markets at the moment has got to do with bond yields. There are, of course, geopolitical issues. we see gold move, we see oil move. That is related to that to a certain extent. But the overdriving, the overarching factor is what happened with bond yields. Now, they've gone up, as you highlighted. They hit 5 early this week. They've traced back now. We've also seen that the Fed has starting to shift its language. It is a bit worried maybe about the increase in yields that we've seen. And I think one of them mentioned that the tightening in financial markets, or the increase in bond yields, is already equivalent to a rate increase. So they shifted their language a bit, that they might move towards a halt. We'll have to find out if that's the case. But I think this is really driving it. So we've seen the weakness in the markets as bond yields rising, and now you see this bounce back. What is interesting, there's also flows in the region. Maybe we could talk about it in a second, but how people are repositioning on India. But this is really what we need to look at. And I'll be very interested to see what the Fed is going to do and how they're going to deal with this, because they can raise interest rates further, but the market is now doing the job for them. Bond yields have gone up. That means your mortgage rate should go up, right? And credit card rates go up in the US. So that tightening should start to filter through and should start to make them a little bit worried about what the economic consequences of this are going to be.
Harold, hi, good morning, and thanks for being with us. So what about a market like India? Because we have lost over 500 points on the Nifty in the last 5 days alone. It's been pretty ferocious, the kind of selling pressure. As the risk aversion towards equities increases globally, would you take money off the table from a market like India?
So actually I don't. But the story for next year is going to be how these bond yields are going to decline. Maybe this is going to be a slow process of a gradual decline. The problem is that we can't rely, and this is what we've learned over the last, say, 6, 9 months or 12 months even, we can't rely on the global conditions for Asian markets to perform. So we need to look at what in Asia is locally strong enough to offset the story of inflation and bond yields in the US, which is clearly negative for us. The stronger dollar is negative for us. So where are there the positive stories? And India fits into that. Now, there's a counter issue to a certain extent here, because if bond yields really start to decline, and they don't have to fall a lot, the Chinese markets will respond more positive to this. And what we see now, and this is quite interesting, is that emerging market funds, so the kind of the global funds that are in Asia, but not the Asian portfolio manager, the emerging market funds, they have sold a little bit of India and moved that into China in the last month or so. Asian dedicated funds, they have stayed with India. Do I think we should be selling India, or should we be buying India? I think India is one of the great stories for the next couple of years across the region. I would like to buy when the valuations are more attractive and when there's weakness in the market. We've seen that come through. So I'm not overly worried about this particular adjustment. I think this has really got to do with global bond yields and not so much about the growth story in India, which seemingly is still on track.
Hi, Harold. Good morning. And you've maintained that in the past, right? If there is weakness in the Indian markets, you look to get in because you believe there's a structural story that's playing out here in India. But give us, your outlook on a couple of factors. You said valuations on the Indian markets. What is that calling for? Is it calling for a bit of a contract? I mean, maybe a cut of 5% odd on the index? What would that be? At what level does the Indian markets become, okay on the valuation parameter? And also in the past, I think you've spoken about the consumer space, banking names that you like here in India. Run us through what you like.
Yeah. Now, first on how I would look at how much downside there could be in markets. That's really a question for me. How much can these bond yields go higher? And can they go from 5 to 6 to 7? Maybe they do. But the data at the moment tells us that probably it can't increase a hell of a lot beyond the 5 of where we are at the moment, right? Some people in the markets have come out and said, we're covering our shorts here. I think you mentioned it earlier as well. We see now that the Fed is changing its language. Says, okay, we've seen quite a substantial increase in these bond yields already. Maybe that implies that actually there's already a kind of a rate hike priced in and these sort of things. So I think if we assume that for the moment, unless new data comes out, we can't really go beyond 5. I don't think there's a hell of a lot of downside in markets in general and in India either. If earnings would come through very weak in India, then I would say, oh, that's a problem, because then we have global headwinds and local headwinds. But at the moment, so far from what I've seen, the earnings forecast for this year, but also for next calendar year, still look pretty intact in India. You're talking about something like 16-17% or so next year. So I'm not overly worried about that. So I think the downside cannot be a hell of a lot from current levels.
Okay, and what do you like?
The second question you had was, hey, what do you look at in India? So it's the consumer, banks, and then you go back and say, what are the structural stories in India, right? And that is formal retail gains market share over informal retail. Private banks probably continue to gain market share over some of the public banks. It is that your banking system has been cleaned up and credit is flowing. So it's these sort of stories where I would hang my head on. So there would be selected retailers, there would be selected consumer names, and the banks. I would be probably a little bit more careful with some of the exporters. So I'm thinking about pharma has done very well, but that's really very often a kind of a product issue as well, and IT. Because if we assume that the US can't really hold on to the strength in next year, at some point in time, those sectors will probably roll over a bit.
Okay. Harold, sort of wrapping up this with a simple question. Do we want bond yields do we want a steep fall in bond yields? Because, I mean, as you mentioned, Bill Ackman saying we've covered a bond shorts, right? There's too much risk in the world to be short bonds. He's expecting a recession in the fourth quarter. So, we're in a juncture where bonds going up or prices yields going down is essentially going to be an indicator of that. And do we want that, or do we want the situation that we are in right now, which is the economy is strong, yields stay high but not maybe too high? What's your view?
My view is that we don't want these bond yields to come off too quickly. Although it is a positive for Asian equities, that in itself could create problems or could be a signal that there is a problem. What we like is a gradual decline in growth in the US. So no worries about a deep recession, but kind of below trend growth for a little bit of time. That would be an ideal situation. That would mean that these bond yields could gradually go from 5 to 4.8, maybe moving towards 4-ish, maybe below 4 over the course of the next 6-9 months or something like that. Now, that would be a nice gradual decline. That would be positive for Asian equities. But a sharp decline would either indicate that the economy is very weak in the US, that's bad for us, or could in itself create disturbances because the market might be wrong positioned and you get all kinds of flows associated with that. So I like gradual adjustments if it comes to that.
All right, Harold, we'll let you go on that note. Thanks a lot for joining in. And I think some sanity, is required at this, or some sane advice is required at this point in time, considering there's a sell-off across the globe. But you're not too worried about a market like India, you say. Thanks a lot for joining in. Well, let's slip into a quick break. On the other side, our list of top 10 stocks is lined up. Plenty of stocks to look at this morning, so don't go anywhere. Mukesh Ambani, the founder of Reliance Foundation, speaks about her new cultural center.
It's taken us now a decade to bring this to life, to show the best of India to the world and get the best of the world to India.
On the Reliance Foundation,
A nation's development depends on women empowerment and the well-being of its children.
On family,
I am so blessed to have Mukesh, who is my best friend and my life partner.
Nita Mukesh Ambani sits down for the CNBC conversation. Welcome back to Bazaar Morning Call. There's plenty happening in the market at the moment. Of course, global cues are not too bad. The Dow was up about 300 points overnight. And there's lots happening in other asset classes like, say, cryptocurrencies, for example. The Bitcoin, if we can get it up, is now at $35,000, which is a gain of 7%. There is an expectation of a potential approval of the first Bitcoin ETF by the US SEC, and that's really caused a surge in the Bitcoin overnight. So we'll keep tracking all of these assets for you. In the meantime, you have our research team standing by with CNBC-TV18's list of top stocks for the day. First up, we have Torrent Pharma on our radar. Ekta is here to tell us why she's watching that one. Ekta, over to you.
Thanks for that. Well, largely an inline set of numbers for Torrent. Revenue was up 16%, margins 31%, profit up around 16% on a year-on-year basis. India did well. It was up 18% year-on-year. Brazil was up 36%. Germany up 21% year-on-year. Only US was below estimates, which was at $30 million. The street was anticipating $34 to $38 million. Now, interestingly, they did speak on acquisitions where they said they are more comfortable with acquisitions in the Indian market. Net debt to EBITDA has gone as high as 3 times due to acquisitions. So the company is willing to increase leverage for acquisitions. The current net debt to EBITDA is 1.16 times. It will be less than 1 times by March 2024. So no real clarity, but this is basically the larger picture in terms of what they mentioned. Brokers positive. Elara accumulate target price 2225. The business performance remains steady according to them. Nirmal Bang buy with a target price of 2,197 rupees.
Okay, all right, Ekta. Thanks a lot for that. Abhishek joins us to tell us about PNB Housing. Morning, Abhishek.
Morning, Nigel. So PNB Housing has seen a decline in their stress. Gross NPA ratio is down to 1.78% versus 3.76% in the previous quarter, largely on account of 2 key reasons. One is that they have sold off the corporate NPAs, and over there, the proceeds that came in from those stress asset sale have been used to write off the retail NPAs as well. Disbursements are up 16.3% YOY and about 13.5% quarter-on-quarter, but the disbursements have not translated into meaningful AUM growth, because as per my calculation, disbursal to AUM ratio is less than 2% when compared to 24.5% YOY and about 20% sequentially. So the AUM growth is weak at 2.6% YOY and 0.1% sequentially. They have been able to improve their net interest margin. However, the spreads are at 5-quarter low. Back to you.
All right, Abhishek, thanks so much for that. Well, Vedanta is going to be in focus as well, because Mr. Ajay Goel, well, he's been reappointed as the Chief Financial Officer of the company effective October 30th. Remember, Byju's had hired Ajay Goel in April, and now, in fact, he's come back. The Vedanta India press release itself, they say that it's part of the company's structured rehiring program, which they've called Kar Wapsi. So he's coming back. But Sonal Srivastava, well, she's resigned as a CFO due to personal reasons. So normally some rejigs at the top makes investors a little bit nervous. The stock ended down by close to around 3.5%, but I think the street will be a little bit nervous about some uncertainty at the top.
Okay, and the stock has been under pressure, right? Even on Monday, the stock was down almost 3.5%. So not looking good over there. But let's move on. Abhishek is with us to tell us about SBI Card and how it looked this time around. Abhishek, over to you.
Well, Sonia, to begin with, the credit card data has been released by RBI. So for the industry as a whole, there has been decline in average spends due to timing difference in the festive season as well, which you can attribute on a YOY basis. So credit card data for the industry shows that card issuances grew by 19.7% YOY and about 1.9% month-on-month. Spends grew by 16% YOY, but they have declined by 4.2% month-on-month, which has meant that the average spend was at 7th month low of 15,341 rupees, which is a sharp decline of 6% month-on-month. For SBI Card, the card issuances were strong at 20.5% YOY and about 0.5% month-on-month. However, total spends grew by 7% YOY, and there is a decline over there by as much as 8.9% month-on-month. So average spends is at 4-month low of little less than 14,000 rupees, which is a decline of 11.2% YOY and about 9.5% on a month-on-month basis. If you take a look at their market share, spends market share is at 4-month low, while card issuances market share is at 7-month low. So that can be a stock which can be in red today. Back to you.
Okay, thanks a lot for that. So expecting red on SBI Card, but Mangalam is here with us to give us some more stocks that are in the news. Mangalam, good morning.
Good morning. So I'm looking at Delta Corp first up, because the Goa bench of the Bombay High Court has directed the DG GST Hyderabad to not pass final orders on the 16,200 crore tax notice that the company had gotten from the DGGST of Hyderabad itself. They've said that do not pass final orders without the prior permission of the court. Remember earlier Delta Corp had said that they will pursue all legal remedies to challenge the DST tax demand and related proceedings. The total GST tax demands right now stand at close to 23,000 crores, and one of the biggest reasons why the stock has corrected almost 50% from the top itself. The question is, how much of a relief can we see on that? Because some on the street were sussing this. On Monday itself, in an otherwise very weak market, the stock ended higher, and also at the same time, it came out of F&O ban. So Delta Corp is one of the stocks that I'll be watching out for. The other one is Mahindra Logistics. Weak numbers, just about 3% revenue growth. The EBITDA declined by almost 20%, and as a result of which the company reported a loss of 15 crores versus a net profit of 12 odd crores. Shift in festive season and global weakness in the freight industry has impacted their numbers this time around. And Kaya, interesting board meet where they've approved fundraising of close to 300 odd crores. The reason why I call it interesting is because the market cap of the company is around 450 odd crores. So that would mean a dilution in excess of 50%. The question is, who infuses this fund?
All right, Mangalam, very interesting. Thanks very much for that. More stocks with news flow. Surabhi is here with details on those. Surabhi, hi, morning.
Good morning. So I'm looking at rice exporters like KRBL and LT Foods as reports suggest that the government has decided to reduce the minimum export price MEP for basmati rice. Now it has been reduced to $950 per ton from $1,200 per ton earlier. Now this means that the Indian rice exporters will be more competitive in the market and the export will see an uptick in the coming few months. Now just to alert, CNBC-TV18 has not verified any of these reports independently. Next on my radar is Keval Kiran. They have declared their Q2 results. It was a good set of numbers. Revenues up 16%, gross profit margin expansion of 130 basis points, EBITDA up 23%, and PAT is up 27% on a year-on-year basis.
Okay, all right. Thanks a lot for that, Surabhi. Well, here's a quick recap of all the stocks we just discussed for you. Positive news flow stocks include Torrent Pharma, PNB Housing, Delta Corp, Kaya, KRBL, LT Foods, and Keval Kiran. While stocks with negative news flow include Vedanta, SBI Cards, and Mahindra Logistics.
Okay, well, let's move on to the commodity markets. Manisha Gupta joins in for a roundup of all the action there. Manisha, I'm sure apart from what's happening in the world of crude, you've been also tracking the Bitcoin, the comeback of the Bitcoin, right?
Oh, absolutely, Sonia. 15% of a jump overnight, and we are at 35,000, highest in this year, highest since May 2022. And there is lots that has been supporting crypto. The geopolitical conflict is one part of it, but the BlackRock, iShares, Bitcoin Trust listing in DTCC, I think big names coming in for the stories definitely are supportive. But when you look at the commodity markets, well, we have seen some profit taking happen here. The crude oil prices, to begin with, fell nearly 3% in the last couple of days. We have seen prices trade to at a one-week lows right now. The Israel-Hamas conflict, markets believe, is under control. Apart from that, the U.S. also has suspended sanctions on Venezuela crude oil that will start coming into the markets. And then the street is also reacting to the weak PMI numbers that we saw come in from Germany and Eurozone. That's weighing onto the demand part of it as well. And then there was a report from IEA suggesting that the fossil fuel demand will peak by 2030. So all of these factors led to some profit taking and pressure at prices.
Oh.
All right, Manisha, thank you very much for that. So, very specific. On Bitcoin, it's that BlackRock news flow, which has kind of reignited interest in a big way. But it's interesting. I mean, typically over the last many years, it's also seen as a proxy for risk sentiment. But is that the way one should take it? Or is that, this is headline specific, news flow specific at this point in time, not symbolic of what's happening in the broader markets? Well, we'll take a quick commercial break here. On the other side, we'll have, the management of Jammu and Kashmir Bank joining us to discuss their second quarter earnings. Stay tuned for that conversation coming up.
Welcome back. Hope you're having a good morning. Let's get straight to our first corporate that we have on the show for you. Jammu and Kashmir Bank. Well, that's the first corporate. The net interest margins expanded. The asset quality was well improved in the past quarter. But what's the way ahead? Mr. Baldev Prakash, the MD and CEO at the bank, joins us on the show. Hi, Mr. Prakash. Good morning, and thanks so much for joining in. Well, let's knock off a couple of basic numbers first. What's the loan growth momentum you're working with for this year and next, if you could tell us that? And also, your NIMs are holding above 4%. Do you think it can continue to hold because liability cost of borrowing has been moving up?
Yeah. Good morning, Nigel. So the growth story of the bank is continuing and intact. And as far as credit growth is concerned, we have registered a growth of around 18%. And going forward also, we are confident that it will be around 15 to 18%. We will definitely maintain it, because generally in the second half of the year, the growth momentum increases. As far as NIM is concerned, though our guidance was around 3.75% to 4%, but we have been maintaining this 4 plus. Last quarter also we had around 3.98, and this quarter also 4%. So I'm very sure that we will be definitely maintaining our NIM within the guidance which we have already given.
Okay, so 3.75 to 4% is the guidance that you've given. So you'll definitely maintain it at that level, given that you've surpassed 4% in the recent past. Mr. Prakash, good morning and thanks for joining in. So that's on growth and net interest margins, right? I want to ask you about why the board decided to defer the fundraising plan. I mean, what was the reason for that? And how much funds were you seeking from the board in the first place?
Sonia, actually, we had an approval of 750 crores in CET1, that equity capital. That is already there. That approval is already there. We wanted to increase the amount, but I think the board has taken a view that let us first go ahead with the 750 crore where the approval is already there. So as far as Tier 2 is concerned, that is 1,000 crore. That approval is also there. So as of now, 750, that is CET1, and 1,000 for Tier 2. That approvals are already in place and we are going ahead with that.
Okay, so you're going ahead with 750 crores CET1 and Tier 2 approval of 1,000 crores. What is the reason? Why do you need capital at this juncture? If you can tell us what the plan is over the next 1 to 2 years.
Yeah, Sonia, basically this will be a growth capital, and we want to ensure that our CRAR remains above 16% and CET1 around 13%. That is the target. And that will help us in the growth also, as well as in improving the rating of the bank also.
Okay, got that. Mr. Baldev, good morning. Could you talk to us a little bit about asset quality? Have most of the stress pools, etc., been identified and are being addressed now? What is the outlook on the same?
Yeah, Prashant, assets quality is the biggest success story of the bank. If you see in the last 1 year, we have started the journey from more than 8.67%. We ended at 6.04%. And this year, already we are at 5.26%. And our guidance is 4.5%. I'm very sure that we will be definitely achieving that guidance, number one. Number two, if you see the slippages also, hardly any slippages are happening. We have a slippage ratio of less than 1.25% during this year. And that means that whatever the stress was there in the book is no more now, and we have already cleaned our book. And I'm sure that net NPA also, after a long time, you see we are around 1. And by the end of this year, net NPA will also go below 1%.
Okay. FY24 end net NPA under 5%. Got that.
Yes.
So last time, when you joined us, you told us back in July, you told us that housing loans is essentially what is driving things in a very big way for you. I think there, growth was running at about 20%. You said, that can be 25% or even more. What has happened the quarter, and what are you seeing out there in that segment?
Yes, Prashant, I think the same story is happening this quarter also. I think the credit goes to the improved law and order situation in our home territory of Jammu and Kashmir. Lot of investment the normal public is making in the housing, the repairs and the renovations also is happening, and that is driving the overall housing loan growth. Besides, we have an ambitious plan of expansion in the rest of the country. Around 17-18 branches we are opening in the rest of the country. Those branches will also supporting our home loan growth besides our liability franchise.
Okay, all right. Mr. Prakash, just to clarify, the gross NPAs, they come down to 4.5% by the end of this fiscal, and net NPAs come down to around 1%. They hold around 1% by the end of this fiscal itself. That's March 2024, right?
Yes, that's correct.
Got it. Okay, all right. And you said the CET1, post the 750 crores goes to around 13%. That's the goal. I think one query that the street has is that the CET1 ratio is low in comparison to our peers. So that 750 crores, it increases it by what? 90 basis points or 100 basis points? What is it?
So we have around 300 crore, 336 crore, which is not yet accounted. That is on account of ESPS shares also. So overall, if we see, it will be more than 1,000 crores. That 336 plus 750 crores. So in percentage, I think we will be definitely reaching to 13%.
13%. All right, got that. And you told us a little bit about asset quality as well. Can you tell us what is the outlook as far as slippages is concerned? What is the expectation on slippages for the rest of the year? And what does it compare to on an average recently?
So, Sonia, slippages are less than 1.25% during this half year. And we are not seeing any much slippages. No lumpy, no big accounts are there where we are finding stress. So we will be maintaining this slippage ratio around 1.25% during this year.
1 to 1.25% of slippages during this year. All right, got that. Thanks a lot, sir, for joining in. It was a indeed a very insightful conversation with you. That's J&K Bank. Very positive, actually. 18% growth target is what they have achieved, and they'll definitely maintain 15 to 18% going ahead. And the net interest margin guidance of 4% will also be maintained. That's a bank that has done phenomenally well. I mean, I think in the last, there you have it, 12 months, it's up 200%. Let's step into a quick break. On the other side, Anuj will be joining in for a quick trade setup. Post that, we'll also bring you the top stock picks for the day from our technical and F&O experts. Stay tuned.
Welcome back. 12 minutes to go for the pre-open session, and it's going to be an interesting one. And probably, fingers crossed, we'll get a bit of a bounce, tactical as it may be, but we do with that with the kind of carnage that we had the previous session, that is Monday. Anuj is here with how he's looking at things. Anuj, good morning.
Morning, Prashant. You know what? On Monday evening, there was a meeting between the top 3 or 4 investors. Nobody spoke because everyone was looking at each other with suspicion who sold. Because, you know, looking at the numbers, we don't know who sold on Monday. FIs and DIs both bought in cash markets, and FIs actually bought 6,300 crores in stock futures. You can't even say that it was essentially a futures-driven sell-off. And even in Bank Nifty futures, there was buying by FIIs. But you know what? This is what happens when the market just becomes perhaps too heavy on one side and then starts to see unwinding. Especially on the mid-cap side, the market has been heavy for some time, and mid-caps needed a correction, and it happened. Last hour sell-off was also intensified by the Fin Nifty expiry, which we had, where the put options surged from 1 rupee to 120, 130 rupees. The Nifty, though, managed to defend 19,255 support by 2 points, so that's clutching to straws, if you will. In terms of move from here, I think the warning is clearly there for mid-cap index. It's fallen about 7% from its highs, and small-cap index about 5.5%. And just to give you an example of how overbought the index has been, the 200-day moving average for the mid-cap index is still 10% down from here. You've already seen the Bank Nifty go to 200-day moving average. It'll be interesting to see if the mid-cap also does that. On the Nifty for the day-to-day, the most important support is 19,255, which is defended by about 2 points. And the options-based support is at 19,140. The first rally is normally vulnerable to be sold into. After a day like Monday, the first rally normally gets sold into. The first resistance is 19,432, and then the bigger resistance is 19,520. Let's see if there's a second rally today. That will be more important. On the Bank Nifty, where we close right at the 200-day moving average, it's become decisively weak. And on Monday, even ICICI Bank towards the end caved in, despite good numbers. The resistance here is 43,519 and 43,831. And the support comes in at 43,000 and then 42,600, which is the May low. But this index is looking particularly weak.
Okay, Anuj, thanks a lot for that. So the index is looking particularly weak. It's definitely a sell-on rally market. And today you might see a bounce, but that could also get sold into. So let's slip into a quick break. On the other side of the break, we'll come back with the pre-opening rates. We'll also have Mitesh Thakkar and Sudarshan Sukhani joining in for some technical trades. Do stay tuned in. Welcome back. This is Open Exchange live from the CNBC-TV18 Motilal Oswal studio, where let's get our technical experts on board to tell you how to approach the market, which has been under quite a bit of pressure. Sudarshan Sukhani, Mitesh Thakkar join in. Sudarshan, good morning. Let me begin with you. This market has been down and out. Of course, global markets are also under pressure, so we're sort of in the same boat. Do you expect more downside? And if yes, what should the approach be today?
Yeah, good morning, Sonia. It is possible that we'll see more downside, but for the day, because we've been so much, heavily oversold now, falling for the last 5 days, we could see a relief rally. But my suggestion would be, do not try to catch this relief rally. This is not the beginning of an uptrend. We don't know that. So given the trend, given the fact that world markets are falling consistently, the answer to your question is yes. The high probability is that we'll go further down. In between, we could see a relief rally, which is not going to be tradable. So really, unfortunately, the trade is do nothing.
All right, got that, Sudarshan. Thanks for that. Morning, Mitesh. Let's come across to you. What's your view on the index?
Morning, Nigel. We have been maintaining a negative outlook, saying that if the Nifty was to break 19,450, we will test the August lows, which was around 19,230, 19,200. There's also a price gap over there. I think we maintain that, and we also now open to the possibility that once 19,200 breaks, we might go sub 19,000 levels as well. So looking at 19,000, 18,850 as the target areas in the coming few weeks. Now, having said that, as Sudarshan was also highlighting, there could be a chance of a pullback rally. So my stance would be to sell on rallies. I think now anything closer to 19,400, 450 will invite selling positions in the Nifty, which could be via buying put options for November or even shorting futures. And in the Bank Nifty, it's right at the 200 average. So I would want a closing below, let's say, 43,000, 40,150 odd zones. And once that happens, then I think there could be a 1,000-point decline happening in the Bank Nifty also over a period of time. So we already have some put options in the Bank Nifty. On the Nifty, I would want to buy into, puts or sell futures on a rally of about 100 points or so.
What about on individual stocks? What are we looking at this morning? Sudarshan, let me start with you. If this sell-off continues, then, what would be on your list?
Yeah, the sell-off could continue, but for the day, we could see a choppy market, even a relief rally. But in any case, the stocks are, mainly independent of what the Nifty does. Balkrishna Industries is a buying opportunity still. Look at the charts. It's not done anything like the Nifty. In fact, it had a very good day on Monday. So buy with a stop under 24.80. A surprise outperformer has been M&M. While M&M had a correction earlier, this part of the leg, when the Nifty has been falling, it's been sideways. That suggests a sense of outperformance by M&M with a stop under 1540. Crompton Greaves is an intraday short. The stock has broken all kinds of support levels. Stop above 288. And Wipro is an intraday short. It's the weakest in the IT stocks and a very weak stock versus the Nifty. Intraday short with a stop above 393.
Okay, got that. Sudarshan, Mitesh, what about you? What are your picks?
Yeah, I have a mix of buy and sell calls purely because there is a good chance of some kind of a bounce back happening. So I have a couple of buy names as well. They are Grasim and Ipca Labs. Ipca did well on Friday as well in a falling market. So now I recommend buying here with a stop below 980 for a target of 1040. While for Grasim, we'll keep a stop just below the Friday's low of 1885. So I recommend around 1884 levels and a target of 1945 on the upside. And on the selling side is AB Capital, which I would recommend selling with a stop at 177 for a target of 160. And sell on Z on a mild pullback, say around 253, 254 levels. Sell here with a stop at 260 for a target of 240.
Mitesh, just a couple of names I want to throw your way and jump in if anything strikes a chord here. So, if you can have these intradays up quickly. So, Loris Laboratories, right? I mean, intraday will come up on your screen. Sold off. I mean, of course, there was an earnings reaction. It was a day late because on the day the earnings came, the stock did not fall. It was actually, I think, absolutely unchanged, but smacked down on Monday. GMDC will come up next on your screen. Lost quite a bit on Monday. This is the worst hit pack. Look at SJVN. Again, sort of bottom fell out on SJVN. IRB was a big loser on Monday. There was Indiabulls Housing, which I think is now closer to 165-ish kind of levels. So it's come a long way very quickly. That's Indiabulls Housing. Amber was another one where I think, the street did not like the numbers. Bank of India, Central Bank, these PSU banks, BOI and Central Bank, both corrected quite a bit. RCF was another one which lost quite a bit. BEML, another, I think, a near 10% kind of cut. Iron Exchange was down 10%. Some of these sugar stocks, Dwarikesh, Dhampur, they also came off quite sharply. It's a long list, Mitesh, and difficult to keep track, but anything jumps out at you out of this list?
I was very tempted to stop you in the middle, Prashant. I was losing track of stocks. But a couple of names I can comment upon. So RCF is something, where I think the long-term charts are very positive. There needs to be closing above levels of 145, which if you look at the historical charts, if we made a weekly closing high of around 138 and an intra-week high of around 145, then on the 16th, on the week ending 16th of December, I think once we cross that 145 levels, I think the stock should get into an uptrend again. So this remains buy on declines for me. Indiabulls Housing Finance, I think there was a big breakdown. I'm looking at a target of around 144, 145 here. And I believe that there is a good chance that the decline will be arrested in the stock and then settle into some kind of consolidation, then attempt a reversal on the upside. Loris Labs was another case of a big breakdown on Monday. And I think the stock could possibly head towards 335 odd levels. While GMDC is something, Prashant, I had this in my portfolio and we exited it about a week before this entire decline started. the stock was extremely overbought. So I think it's just cooling off. The long-term charts remain strong. I would be a buyer, but on mild declines to about levels of around 300 to about 290. Now, it is not a mild decline because it's about 15-20%. But if you look at the rally, which started from 160 to 420, in that sense, it's only about a mild retracement of about 40% or so. So I think around those levels, I would want to buy into GMDC again.
Okay, all right. Thanks a lot, Mitesh, for joining in. By the way, the pre-opening rates are settling now, so let's just wait by for a couple of more minutes. Delta Corp will definitely be the big stock on the upside after there was a stay on that order, the tax demand order. So the Goa bench of the Bombay High Court has directed the DG of GST in Hyderabad not to pass the final order on that 16,100 crores of tax notice. So perhaps some relief rally there is what we're looking at. But let's get some more stocks on board. You have Rajesh Palvia, who's the Vice President, Technical and Derivative Research at Axis Securities, joining in. Rajesh, hi, good morning. What are the stocks that you're looking at today, considering that it could be another volatile day?
Good morning, Sonia. So trend is likely to remain on the bearish side as we have given a breakdown below 19,300, and both the indices Nifty and Bank Nifty has witnessed the long unwinding setup in the previous trading session. And looking at the data setup, one can initiate a short straddle strategy for Nifty of 19,300 strike. So by doing writing of call and put of 19,300 strike, you are pocketing around 180 rupees as a inflow of premium. So as we are predicting that, on the higher side, again, there would be a supply pressure. So your break even on the higher side would be at around 19,480. And on the downside, 19,120 is your lower break even area. So we believe that, for this month, expiry is likely to remain around 19,300. So this strategy, short straddle, will give profit ahead of this expiry. So keep your stop loss of 220 for writing of this premium, and once the premium shrink towards 90 or 100 rupees, one can book profit also. On the stocks front, one can go short in Canara Bank. There is a breakdown in the previous session. And looking at the structure, we expect that, further follow-up selling we can see in Canara Bank, and a lower side target is 340, 335. One can keep a stop loss of 363. The another stock that is looking bearish from metal space, that is JSW Steel. One can go short JSW Steel also. We are projecting target of 730 to 725. One can keep a stop loss of 762. And the stock one can look at to buy is Bajaj Auto. Overall structure is bullish. In this series, we have seen outperformance in the Bajaj Auto. So some recovery trade we can see in Bajaj Auto, and on the higher side, we are projecting target of 54.60 to 54.80. One can keep a stop loss to buy this stock at around 5370.
Okay, all right. Thanks a lot for that, Rajesh. Wishing you a good day ahead. By the way, just keep an eye on the pre-open rates. I think we'll need it to settle down because a couple of large names, Bharti Airtel, your Maruti, Reliance, ICICI Bank, they're showing a cut of more than 2%. And that's why the Nifty is suggesting a gap down, contrary to the gap up that the GIFT Nifty. So let's wait for a couple of minutes more. But let's focus on a couple of stocks then. Nimesh joins us to tell us about a note on NTPC. Well, Nimesh, we've been waiting for the separate listing of the renewables business, but Bernstein, they have a different view altogether. Tell us more.
Absolutely different view. In fact, the note says that the separate listing of the renewable business will be a very big negative for NTPC, not only for NTPC, but for the overall India's renewable aspiration of 500 gigawatt by 2020. Now, I'll just mention a couple of reasons they've mentioned in the note why a separate listing is not necessary for NTPC. The first being learnings from Europe. In Europe, between 2006 and 2010, 4 companies had listed their renewables business separately. 3 of them got remerged into the parent on the lack of fundraising as well as higher valuation. So that was a learning from as far as Europe is concerned. Even in the US, there is a company called Next Era. They listed its renewables yield company as a separate entity, and that stock is down 68% YOY and struggling to raise funds as well as higher valuation. So that's a learning from US as well. Third, renewables in general requires a lot of cash. In case of NTPC, the thermal business can actually be a support to the renewables business, and hence should not be listed separately. A separate listing will actually make a bit complex for NTPC going forward. And fourth, the holding company discount, that again is negative for the shareholders. So these are the 4 reasons why Bernstein very firmly believes that renewable business should not be listed separately, but should be part of NTPC, and that's a big learning from global as well as from Indian experiences, what they've highlighted in the report as well.
All right. Thanks a lot, Nimesh, for that. Let's move on. Vivek is joining in to tell us about L&T and why you should keep it on your radar. Vivek, over to you.
Well, good morning. Absolutely, an important update coming in. So one of the company's loss-making subsidiaries, that is, the Hyderabad Metro project. Now, important development coming in over there. Metro Rail Hyderabad has received the state government approval to sell the Rayadurg business undertaking. Now, remember, on August 16th, the board have approved the sale of this particular undertaking, mainly consisting of a large land bank near the Hyderabad Metro. CLSA has come out with a note on L&T today morning. What they're saying is that with this particular development, the Metro Rail Hyderabad is turning around very quickly. What they're saying, number one, bounce in traffic. Number two, settlement of claims via soft loans from the state government. And along with that, Telangana government has started to honor its commitment of close to 3,000 crore zero-coupon grants to actually go ahead and settle claims. So what CLSA is forecasting on Hyderabad Metro is that they forecast the losses to fall by 53% by FY26 and a break-even by FY28. Remember, L&T has been mentioning that they are looking to hive off these assets once operationally there is a turnaround. For the first time in Q1, the company actually saw an EBITDA break-even as far as the Hyderabad Metro is concerned.
All right, thanks a lot for that. Well, Abhishek is with us to give us a bull and bear take on PNB Housing. Abhishek, over to you.
Well, brokerages remain divided on PNB Housing. So, on the bull side, we have Morgan Stanley, Motilal Oswal and DAM Capital as well, who say that the stress has cleaned up and they have used the proceeds from corporate NPA sale to clean up the book in retail NPA as well. Visibility is there on AUM growth ahead, and they see potential for net interest margin and ROE expansion for the company going ahead, as credit costs will moderate, which will also aid in improving the return ratios. So, Motilal Oswal has upgraded the stock to buy from neutral, increased the target price to 950 from 700. DAM Capital as well have increased the target price to 845 from 815. On the bear side, we have Investec. They continue to maintain the sell rating and a target price of 665 per share. They say that the growth guidance look very aggressive at 17 to 18% in FY24. They have factored in AUM growth of 7 to 12% in FY24 and 25 on the lower side. So ROE to remain subdued at around 12% even in FY26 due to low leverage. Management is looking to restart the corporate portfolio in few quarters, and this could support the AUM growth. However, the execution seen in the past with respect to corporate portfolio is a cause of concern, is what Investec says. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. Let's go across to Ekta. She's joining us to tell us about Torrent Pharma. Ekta?
Inline set of numbers. Revenue was up 16%, margins 31%, profit up 16%. India did well. It was up 18%. Brazil and Germany grew in double digits as well. The US was below estimates, $30 million versus estimates of around $34 to $38 million. On acquisitions, the company said they're more comfortable with acquisitions in the Indian market. Net debt to EBITDA has gone as high as 3 times due to acquisitions in the past. Hence, they are willing to increase leverage for acquisitions. Net debt to EBITDA, they are targeting at around 1.16 times, which will be less than 1 by March 2024. So less than 1 by March 2024. Brokers are positive. Elara accumulate target price of 2225. Business performance remains steady according to them. Nirmal Bang buy target price of 2197. Strong performance across branded markets. Nomura has a buy call as well. According to them, the Q2 earnings was marginally below estimates. HSBC buy, they are positive on the structurally strong business profile of the company. Jefferies has a hold. According to them, capital allocation will remain disciplined as per the company. And Goldman Sachs has also a buy rating and a target price of 2325. They forecast a 20% EBITDA CAGR over FY23 to 26 for the overall business. So if you're just talking about the numbers, it's been a good steady performance for Torrent. Obviously, the street will wait and watch what the plans are when it comes to any kind of large M&A.
Okay, so Torrent Pharma, India business looking good and the stock is up in the green. Thanks, Ekta, for that. Well, let's get some 9-10 calls out of the way. Sudarshan, what's the big call at 9-10?
Balkrishna Industries is a buy with a stop under 2480.
Okay, and Mitesh, how about you?
I'll go with the buy on Ipca Labs, stop at 980, targets of 1040.
Okay, so Balkrishna Industries and Ipca Laboratories are the two stocks from our technical experts. Before the market opens, Prashant has walked to the wall to give us an interesting data point on China versus the India story, the flows, valuations, elections, and a lot more. Over to you, Prashant.
Well, thanks very much for that. This is not my view. This is, the famed investor, noted investor Akash Prakash, who runs a few $1 billion of money here in India. who's basically written a column. He writes a piece for the Business Standard, and we've picked up the latest in terms of what he's saying here for this piece. So, this piece basically is based on, as he calls it, meetings with some of the top global asset allocators who invest in countries around the world. And he's kind of sort of weighed in with the feedback that he got in these meetings recently on these issues. So I'll start with China, right? Now, the titles are mine alone. I mean, I'm paraphrasing in a way, but this is what he writes. He says, in previous meetings, there were many allocators who had not given up on China. Today, the mood is very different. And everybody has limits on their China exposure set by their boards or trustees. So his point is, generally, there is a fair bit of disenchantment on the Chinese front. Will that mean that flows out of China will come to India? We talk about manufacturing, China plus one in the context of manufacturing. What about China plus one in the context of flows? Here he says that many of the institutions, global institutions, have short-term liquidity pressures. So when they sell in China, the immediate use of the capital is to fix some of these short-term liquidity issues. So, that is slowing the movement of capital, portfolio flows from China to India. On India itself, I mean, there is more interest, and the view, he says, is much more longer term. He says there is high level of interest among allocators who historically have not bothered with the country. That is interesting. He says growth prospects were mentioned in every conversation. The 67% growth here, the 15% earnings growth, which is not to be found anywhere, at least for the next couple of years around the world. The ability of India to deliver high-quality compounders was consistently mentioned in these meetings. And he felt there was a sense of there is no alternative, that famous Tina factor, that's his sense. He says the strength of the domestic sentiment, domestic flows which have become so large was also appreciated. So that's the bit about India, where there is a fair bit of interest. Elections are coming up, right? So this is a topic, I think, which will gather more and more interest. He says there was little concern about the upcoming elections, state elections or the general elections next year. If you can move the graphics along. There you go. So there was little concern, and most global investors seem to assume that the current political dispensation will continue. Right? So that's interesting. No one's really bothered about any sort of upheaval or anything of that sort. About US itself, he says, looking forward, US has all the innovation, is energy surplus, the best demographics, and has got the best companies as well. This is all feedback he got from these big, large global asset allocators. And he says that a question which comes up often in these meetings is, why go outside? Why not stay home? I mean, for the US dollar is the US, and since it's got all these advantages, why go outside of it? That's, again, interesting. To sum it up, this is Akash's own view, and this is how he ends the piece. He says, my sense is that money will come to India, but it will take some time to materialize. Money from China, from other parts of the world, which will find its place here in India. He says valuations are a real stumbling block, and a market correction would give new investors much more comfort. And lastly, he says, long-term case for India continues to gain traction, and the opportunity is ours to lose. Back to you.
Okay, thanks a lot for that. So that's a view coming in on India. But let's get down to the market opening now, which will open in about 10 seconds. Looks like it's going to be a decent opening. There is a bounce coming for sure. The Nifty is indicating a start above that 19,300 mark, led largely by names like Hindalco, SBI, Tata Steel, HDFC Bank and Adani Enterprises. So that is the first tick on the index. You have the mid-cap index also, which is rising, actually up 176 points, now 186, 190 now on the mid-cap index, and there 200 points higher on the mid-cap index. So 0.5% rally, good green opening across indices, sensex, Nifty, mid-cap, bank Nifty, all in the green. The advance decline ratio is also well in favor of advances at 3:1. Now, if you look at the bank Nifty, it's batting for the bulls this morning, up almost 190 points. And then let's take it straight to the individual banking names. There's SBI, HDFC Bank, that is up in the green. Bajaj Finserv from financials is higher as well. And Maruti Suzuki comes out with its numbers this week. The stock is up about 0.4%. Hero MotoCorp, TCS, Divi's, HUL are a couple of stocks in the green. On the red side, there's NTPC down about 1.5%. There's news flow on that one. Infosys, in fact, a lot of IT stocks are under a bit of pressure. Starting with Infosys, there's Tech Mahindra that comes out with numbers later in the evening, so keep an eye out on that one. Britannia, HDFC Life, Power Grid, Cipla are a couple of other stocks that are just a tad bit in the red. But otherwise, it's a decent looking market opening, you'd have to say. 50 points higher on the Nifty now and 150 points higher on the sensex. Let's see how long this green lasts.
Well, indeed. A few stocks in focus, though, Sonia. Delta Corp, the one that's corrected more than 35% in this year itself. Well, that stock is up close to around 6% because they've got some relief from the courtrooms. So good on them. That stock is holding well in the green. Genius Power, that's another big winner. It's up close to around 5%. It corrected in Monday's trading session, so that bounces back. NCC Limited, well, that's up close to around 3.5%. And Union Bank as well is higher in trade today. NTPC, well, Nimish had highlighted that note by Bernstein. Listing of the renewables business may not be the best thing for them. That's at least what Bernstein believes. That stock is down close to around 1% as we speak. Other big movers from the broader markets, let's pull up a few of them. Sri Renuka, that's up close to around 4%. So that's moving well. South Indian Bank, volumes very, very high. That's up 3.5% as we speak. And a couple of other notable movers. India Bulls Housing Finance took a sharp knock. Well, that's pulled back as well. And MMTC, we've been warning you about some of these low float companies. Just in the last 5 sessions, I think the stock has corrected from around 85 rupees to around 57 rupees. Zomato as well, catching its breath, it seems. That stock is down close to around 3% as we speak. But a decent opening, Prashant, almost in line with what the GIFT Nifty was suggesting.
Yeah.
The Nifty Bank, that's the key one in there, and the Nifty Financial Services Index. Because in the final hour of trade on Monday, both of them did see a sharp decline. Both of them have bounced back a little bit this morning.
Yeah, no, absolutely, Nigel. So it's about 40 points right now on the Nifty. We're at about 19,322. By the way, market breadth is maybe things will improve a little bit. 200 higher and 1,700 lower. By the time we left off at 3:30 on Monday, advanced decline was 10:1 in favor of declines. I mean, this is just too early, but it's deeply in the negative. Market breadth, that is. There you go. All right, we'll come back to this in just a bit from now. I think we mentioned Zomato is the top volume traded stock coming up on your screen. Varun Beverages is down about 0.75%. This is, I'm kind of sorting this by volumes. So Credit Access is down about 2% or so. I think Orissa Mine sold off sharply on Monday. It's down another 2.5%. There is NTPC, as Nimesh was highlighting, 1.25% lower. Paytm, I think, sold off sharply on Monday. It's down another 1.5%. Supreme Industries, it had that flash move to almost, I think, closer to $5,000, I think. It's back to about 4,200, down another 2%. Lodha, that is Macrotech, is down about 2%. Max Healthcare is down about 2%. Policy Bazaar will come up on your screen. 4% loss there. From levels of what? I mean, almost 820, 830. 2 weeks back, it's down to about 670 now. That is Policy Bazaar. Mahindra Logistics reported numbers. I think numbers are a little... it's not exactly great numbers, but 4% lower in Mahindra Logistics. So, yeah, I mean, there is a fair bit happening and things are moving around quite a bit. But on the upside, apart from what my colleagues mentioned, Delta Corp, 5%, almost 5% higher. Suzlon continues to, inch higher, about 4% up. Stocks at about 33 plus now, consistently comes up with, in terms of large volumes. Union Bank, Indian Overseas Bank, UCO Bank, Central Bank, the entire public sector bank space is coming up with some gains as well. So it's not a bad-looking screen. And, I just want to put out KDDL, that is Kamla Dials, which is coming up with 11% gain. So that's a big one that we have at this point. So 36 points, it's a decent start after a complete carnage on Monday. So we'll see, watch levels closely. 19,323 is what you have. Pankaj Tibrewal is with us, Senior Executive Vice President and Fund Manager Equity at Kotak Mahindra Asset Management Company. I mean, the folks over at Kotak have been warning of the euphoria in the mid and small cap space, Pankaj. So, well advised consistently for some time now. But just comment on what we saw on Monday. Were you surprised? And, that question, who sold? Because you get the net flow numbers and both FIs and DIs did not. So if you want to just start there, go on.
Good morning, Prashant. If you remember our last interaction, many of the data points have been suggesting that the valuation of small cap and micro caps have been in a frothy zone. And if you look at the breadth from the day the first crack happened, which was 12th of September, the breadth has been extremely poor. And that was also witnessed in the month of September, that the median stock return of small cap index was negative, whereas the index was positive. So the rally was getting narrower and narrower. And on Monday, it was the worst breadth of 2023, where almost 1,200 plus stocks had 3% plus kind of a drawdown. So I think the breadth is getting a little worse. And these are the first indications that people are kind of worried on this small cap, micro cap, and mid cap universe. The other data points to watch out is that the large caps have become much more reasonable. And if you look at any data points, either be large cap universe to GDP or large cap universe to overall market cap ratios, I think all of them are suggesting that they are in a reasonable valuation zone compared to mid and small cap category. The third data point, if you look at since September 2021, the large cap universe is up by almost 13%, the market cap. And if you look at their aggregate profit growth, it's up more than 40%. So there has been a derating in the large cap. And almost in our calculation, more than 40% of Nifty stocks have not participated from the run from 15.5, 16,000 to 19,000, which provides cushion on the downside. So we believe that at this point of time, there are few lessons which one needs to implement from the past cycles of 2007-8, 2017-18, that one must not ignore quality. I think quality anchoring at this stage is extremely important. Broken balance sheets, broken businesses should be avoided. Leverage should be avoided at any cost. Also, one should be in the market, in stocks, and stock selection should be very selective, where there's earnings visibility and predictability, and making sure that asset allocation is the way to go.
Okay, by the way, the metal stocks are the flavor of the moment. So Hindalco, Tata Steel, JSW Steel are all your big gainers this morning, and up anywhere between 1.5% to 3% odd. So keep that on your radar. And on the downside, you have a couple of the pharma names, Divi's Labs, Cipla, Apollo Hospitals, that are all in the red. Pankaj, good morning and thanks for being with us. How are you feeling about the global situation now in the context of how one should approach this market for the rest of the year? Do you think time has come to take some money off the table, perhaps move to cash because of the risk aversion globally towards equities?
Yes, Sonia, I think what we are seeing is that there are geopolitical risks which are, kind of increasing. Last year, it started with Ukraine, Russia. Now the Middle East, the Israel-Palestine or the Gaza part is creating some kind of a nervousness. On the other side, you are looking at the 5% bond yield. And if you look at since September of 21, the correlation between bond yields to Nifty earnings yield has been a staggering 85%. It has not been so highly correlated. So from a valuation perspective, also globally and locally, we need to be careful that the cost of capital has gone up materially in the last 2 years, and that may provide a headwind to the risk asset classes like equities, for example. So one needs to be extremely selective, and also one needs to keep a very close watch on the global developments which are happening in front of us, right from the China slowdown to the Middle East crisis to the bond yields in US. All are the headwinds one we need to carefully watch out. And in domestic arena, you have elections, the state elections, 5 state elections in the month of November, December, followed by the general election. So our sense is that volatility will pick up and one needs to carefully navigate in the short term.
Hi, Pankaj. Good morning. You have been warning us with regard to the broader markets getting overheated, and, it's playing out in that way. So to call it, you'll realize those that were flying without floats in the deep, at these crucial junctures. And you put it very, very well in that tweet that you put out, that PE is not just price to earnings, but promoter ethics as well. Capital allocation is very, very important. So, those are important points that are made with regard to the broader market stocks. But tell us about earnings as well, because that's going to be the most important, right? Fundamentally, if earnings continue to compound, then no worries in the Indian markets. And that's what most are counting on. How has earnings season panned out? And do you think that mid-teens earnings growth on the Nifty stocks is at risk?
Good morning, Nigel. On the earnings side, if you look at the NSE 500 universe, which we track very closely, till yesterday, 90 companies have reported. Out of that, 62 are non-BFSI and 28 are BFSI. And these 28 companies have reported 40% earnings growth. whereas the non-BFSI, the 62 companies, have reported 18% earnings growth. And on an aggregate basis, these 90 companies of NSE 500 companies have reported 28% earnings growth. And the clear sign is that lower revenue growth, but we have seen margin expansion. Out of the 62 non-BFSI companies reported till now, 36 of them have seen margin expansion. So probably in our view, this may be the last quarter where you see massive margin expansion due to lower raw material cost. Now, as crude has inched up over the last couple of months, probably that will be on the margins in the third quarter. But still, we will see year-on-year margin expansion even in the third quarter. So our sense is that the mid-teens earnings growth on Nifty probably looks to be a reasonable ask. I don't think a bigger risk on that side, but don't ignore the fact that over the last 2-3 months, except BFSI and autos, most of the other sectors have seen earnings downgrade. And in this quarter also, IT especially has seen earnings downgrade. FMCG, whatever little number of companies have reported, they have seen some kind of earnings disappointment. So we need to watch out the earnings trajectory very closely. Early days in the second quarter, but 90 companies have given some kind of a direction that 28% earnings growth with lower kind of a revenue growth.
Okay,
watch out the markets. Watch out for the markets. Pankaj, we're just coming back to you. We've moved into the red actually, and stocks like Divi's, Apollo Hospitals, HDFC Life. Just get some of these intraday charts up for you on the screen. The Nifty has moved into the red. The mid-cap index has moved into the red as well. And the advanced decline ratio that was looking very, very good just a few minutes ago, that's narrowed down as well. Sonia, I just caught my attention.
Yes, in fact, if you look at the broader markets, there are a lot of stocks that are now seeing about 4-5% losses, right? So you look at something like an MMTC, something like, a whole host of these stocks actually in the broader markets, all the vulnerable names are under pressure. And the market overall has also come off from the day's highs quite a bit. The Nifty now well below that 19,300 mark.
Sonia, typically what happens is that after very sharp falls, usually you see the next day there is a, because there could be margin calls, all of that happens till about 11 o'clock, and then after that, you get a better, clearer kind of a picture. All of that, correction and the allied damage, etc. is cleaned off, and then you kind of take a fresher kind of a view. So, in a way to be expected. In any case, the bounce has we've been outlining. Call it a tactical bounce. Would it be a few hours, not even a few hours old? We'll see. My sense is perhaps, once this clears out, there is a bounce. And the 35-40 points that we saw is not it. So let's see. 19,273 is where the Nifty is at right now. Pankaj, sorry, just to come back to you. Did you say that when you were describing earnings and what we've seen so far for BFSI and non-BFSI, for the non-BFSI, the trajectory is looking worrying? Is that your conclusion?
No, Prashant. I think if you look at the last quarter, even in the first quarter, after FY23, we saw the first quarter in FY24 where broader markets earning was quite good, which is especially the non-BFSI segment. But only point to just keep in mind is that if you segregate the NSE 500 companies into two buckets, the BFSI, which are about 77 stocks, and 423 stocks, which are non-BFSI. Non-BFSI valuations are at about 80% premium to the BFSI bucket. So BFSI actually has got derated over the last couple of years, despite of very strong earnings growth. And when you kind of bucket it out into two different parts, non-BFSI and BFSI, you kind of understand that a lot of market is pricing in a very sharp earnings growth. So one should be, kind of careful in that way that the expectations are very high running into the second and the third quarter results for the non-BFSI space. But having said that, early days still, only 90 companies of NSE 500 companies have reported. Earnings have been good, 18% earnings growth in line with expectation. Let's watch out for the remainder of the earnings season.
Okay, by the way, the mid-cap index is selling off quite rapidly now, so don't lose sight of that. 100 points gone on the mid-cap index already, and lots of individual stocks in terms of both volume and price action on the downside. So, if you look at something like a Vodafone, it's down 1.5%, Zomato is down 1%, Bajaj Hindustan is down 0.6%, and lots in the infrastructure space like BHEL as well under pressure now. Pankaj, how are you feeling about IT post the earnings that we've seen so far? Would you put any fresh money to work here, or are you still cautious on this sector?
Sonia, as expected, I think we have seen earnings downgrade in the second quarter of most of the large IT companies who have reported. And the outlook also for the remainder of the year doesn't seem to be inspiring. However, the only positive is that the order inflow continues to be strong, and which gives up hope that FY25 could be a very strong year in terms of growth compared to FY24. So over the next 3 to 6 months, we'll scout for opportunities out there. And we believe that 25 is the year one should be playing for IT. And there, I think if valuations have become reasonable, we would look to reduce our underweight, which is there across most of our portfolios in IT right now.
Okay, all right. Pankaj, final question before we let you go. We are going to be approaching state elections and the general elections as well. And rural India has been struggling a fair bit. Do you think, since the government is likely to try to boost that part of the economy up, would you play some of these names, maybe the consumer names, I don't know, the two-wheeler names, some of them have already done quite well?
So Nigel, if you look at the data points, at one point we were worried about the monsoon progress, but somewhere the monsoon has ended at about 95% to long-term averages, which is not bad. The only worrying point is that the water reservoirs are at about 73-74%. compared to last 10-year averages of about 90%. So that may have some impact on Rabi crop. So just keep that in mind. However, if you look at the past data, 6 months before the election, 6 months after the elections, actually the money gets spent at the ground level. And don't forget, this time there are two more things. The festivity has been pushed to the third quarter, which was last year in the second quarter. And third is that the marriage season is very heavy, about almost 35 days of marriage season this time around, which is one of the, itself in an industry in itself. So I think if you look from a next 12 months perspective, many consumer discretionary names in this correction probably will be looking attractive, which have strong franchises and strong balance sheet and cash flows.
Okay, well, it was great speaking with you, Pankaj. Have a good week and thanks for joining in and speaking to CNBC-TV18. Well, that's the word on the market, but let's move on. JSW Energy is the company on our radar now. Very good quarter, actually. Strong merchant power sales. The volumes were good, coupled with higher realizations. The margins improved because of lower raw material costs. So all in all, nothing to complain. The stock is down 1.5%. The market is under pressure, so maybe some profit taking there. Prashant Jain, the joint MD and CEO at JSW Energy, is joining us now to talk more about the numbers. Prashant, thanks a lot for joining in. On all aspects, if you look at it, it was a very good quarter this time. But just give us a sense of how the demand trends are shaping up at the moment. The merchant power trend has picked up quite a bit over the last couple of quarters. But what is the kind of market pricing that we are looking at? What is the kind of up moves that you're seeing in terms of demand over the next few quarters?
Yeah, hi, good morning. So demand is quite robust. During the quarter gone by, the power demand was up by 13%. And as we are speaking in the October month, till date, the power demand is up by 19% in the month of October. So I think there is too much of government spending which is happening. There is a lot of capital expenditure which is going on. Underlying demand for other items are quite robust, and that is what is reflecting in power demand. So power demand is quite robust, and that is also reflecting into the peak shortages which we saw in the previous 2003 to 2008 kind of a scenario where we saw the similar kind of a deficit, and now the grid size is almost 3x of the grid size which it was at that point of time. So the demand is quite good, and we feel that merchant tariffs will be elevated.
That was my next question. So merchant tariffs at the moment, I think, are at about a little over 8 rupees a unit. What is the expectation as we move along into the fag end of the year and by the end of the fiscal year as well? What are we looking at in terms of pricing?
It's very difficult to talk about the pricing, but one thing one should also remember that the coal prices are also very high now. With the oil inching to $95, the coal prices have already shot up to $135, and so that is also putting a lot of cost pressure overall, and there are the inflationary pressures globally, and all that is putting a pressure on the energy side also. And that's what we feel that because of all these reasons, the the prices of merchant power will be elevated, but we don't know that what kind of a profitability it will entail to the companies who are into the merchant power sales.
All right. Hi, Prashant. Good morning, and thanks so much for joining in. We need to address all aspects of the stock. So you're giving us an outlook operationally. The markets were weak on Monday, so maybe that's why the stock was under some pressure. But there was some rumors as well that was doing the rounds. I need to put this to you so that we clear that rumor. You have any plans of moving on from the company, or are you sticking with JSW Energy? Because that was a rumor that was doing the rounds on Monday.
So I'm not sure about the rumors which are there in the market, and we would not like to speculate anything and would not like to comment on any kind of a speculation. As we speak, that I'm the joint managing director and CEO of the company, and there is nothing as such.
Okay, good. So no plans of moving on. We'll take that. We'll take your word for it as of now. Let's focus on business then. The short-term sales of the merchant power, they accounted for roughly around 200 crores on the EBITDA front for the past quarter. Now, give and take everything, do you think on an annualized basis, short-term EBITDA could contribute, say, around 700 crores, given the kind of challenges that you have, the seasonal aspect as well? I'm just trying to analyze that number.
So, Nigel, it is very difficult to talk about the kind of EBITDA contribution which can come from the merchant sales. But what I can talk about is that right now we are having a open capacity which is close to 800 odd megawatt, which is existing capacity, and there is another 700 odd megawatt which will be getting on stream during the current financial year. So that is the open capacity which we will be using to cater to the market. And as I said in the previous question also, that there are the inflationary pressure on the coal side of cost also. And it's very, very highly unpredictable to project that what will be the power prices going forward. So, but we will be able to capitalize on the dark spread, whatever will be available into the market going forward.
Okay, and in Bharat, that is around, I think, 700 megawatt, right? That gets commissioned sometime towards the end of this fiscal or the start of next fiscal. On an annualized basis, what could that contribute on an EBITDA basis, going by current pricing? Things could change, but as things stand, what could in Bharat contribute? Because we're looking at it from FY25 basis.
So what I can say that the in Bharat contribution will be little higher than the other two plants which we are having at this point of time, because they are based on the imported coal, whereas the in Bharat will be based on the domestic coal, and it is situated between the, in the coal belt area. And because of that, the fuel price at in Bharat will be little lower than these plants by, you can say, in terms of the percentage, it will be 40-45% lower. And so that will be giving a little higher contribution. And then accordingly, it can be estimated, whatever it will be the merchant sales price.
Got it. Mr. Jain, hi, good morning. Prashant here. Could you talk to us a little bit about what are the plans for value unlocking in JSW Neo? I mean, will we see an IPO? Will we see strategic investors coming in? Is due diligence on? By when can we expect an announcement?
So, hi, good morning, Prashant. So, we are, as we have been maintaining the stance that we are looking to evaluate all kind of proposals which are on the table. And the structure side, we are absolutely ready. And at some point of time, whenever we see it deemed fit, the board is going to consider either of the options which you have stipulated. And as and when such kind of a situation happen, then we will be certainly talking to you.
Sorry to press you a little bit. I mean, give us what you can, I guess. But will we see something this year, sir? Or and are investors already taking a look at it? Is due diligence on in full swing?
So, as I said, that we don't have any kind of a timelines. We don't have a plan to, which is totally fixed. But, we are really mindful about the growth of the company. We are a growth company. Right now, we are generating enough cash to fuel our growth, but we see the size of opportunity is pretty huge, and we can accelerate the growth going forward, provided we have more equity on the table. And for that, we need to have like-minded partners in synchronization for both that kind of a growth for next 1 decade. So as and when something like that is materialized, then we will be putting it to the board, and then board is going to take a call on that part. So there is no firm timelines, but yes, it will happen.
Okay. Just one last point on this. Bernstein, just completely incidental, but Bernstein this morning put out a note, not on JSW, but on NTPC. And they, their thinking is that for NTPC, again, there's been a buzz that there'll be the renewable business will be spun out and listed separately, etc. They say it's not advisable. And they say that globally, we've seen many of these things happen, and then eventually, after a few years, these entities are remerged. They come back into the parent fold. Large reason essentially is because the renewable business has got large cash infusion needs to build it up, etc. And that is best done funded through the cash of the thermal business, because that is still the mainstay for most. I just wanted your thoughts, sir. And how would you? Are there any takeaways for you when you're thinking about this? The options are open. You're not decided, but any thoughts?
So as of now, what I say that in case of JSW Energy, so far we have been utilizing the thermal business cash flow to fuel the growth of the renewable business. And as the power shortage is coming up, there are the opportunities to grow the... Yeah.
Sorry, go on, Mr. Jain.
Yeah, so there are the opportunities to grow the thermal business also, and as and when there are the enough opportunities which are coming up, we will be looking at the thermal business also. But I don't see that the thermal business is going away anywhere in next 1 or 2 decades.
Okay, all right. So, there is a very high visibility from within the JSW group in terms of capacity addition. Just wanted to understand from you, what is the capacity that we're looking at over the next, say, 5 to 10 years? What is the targeted IRR for this capacity? What kind of pricing? If you can just give us a roadmap over the next, 5 to 10 years.
Yeah. So basically, JSW Group is a growth-oriented group, and then we have been looking at various opportunities within the group for from the decarbonization perspective. And in that aspect, JSW Steel, which is having a short-term to medium-term plan to go up to 50 million ton and eventually to 100 million ton, and we realize that in next 3 to 5-6 years, there are the opportunities to do close to 6.2 gigawatt of the renewable capacity for the group. And in addition to that, in order to make the green steel, they will be requiring close to 85-90,000 tons of the green hydrogen, which will also require close to 1.8 gigawatt of the renewable capacity, and plus around 3 gigawatt hour of the storage application. And all this, we are expecting that we will be doing by 2030. With regards to pricing and equity IRRs, it will be at arm's length, will be discovered between the two companies together. Historically, we have been seeing that whatever projects we have been doing in JSW Energy, our threshold has been 15% equity IRR post-tax minimum.
Okay, 15%. So you'll hold on to that 15% IRR for this entire, 100 million ton, the journey from 50 to 100 million ton that you're talking about.
Yeah.
Okay. I just had one more word in terms of margins. We've seen the way coal prices have softened from the recent peak. So just trying to understand, what are you targeting in terms of EBITDA margins for the full year for FY24 and for 25?
We don't look at the EBITDA margin because, power is a very different kind of a business where, in case of our PPA tied up business, we are going to get the fixed cost recovery. In case of renewable business, the EBITDA margins are 80-85%. That is also the complete fixed cost recovery because there is no variable cost. It's only the dark spread which is relevant, which is in case of the merchant tariff, which we explained about the open capacity. So that is totally dependent upon what are the market conditions, and depending upon 1 rupee to 5 rupee, this spread can be taken.
All right, very quickly, Prashant, y'all had the edge with regard to sourcing some coal from Russia as well. Is that still on? If you could tell us how much of your coal requirement is coming in from Russia?
I won't have the absolute number right now, but yes, we have been really agnostic about the location. And we have been looking But we see if there are opportunity from Indonesia or South Africa or Australia or Russia, wherever we are getting the cheaper coal on a variable cost perspective, we just go and latch it on. And so historically, we have been buying coal from Russia, and which have been proven to be the cheaper to us. But right now, in last 1.5 months, we have seen that the Russian coal prices are at par with other sources.
All right, Prashant, thanks so much for joining in, giving us an outlook on business and also clarifying that as of now, there are no plans to move on. So we're taking your word for that. Well, on that note, though, we'll slip into a short break. When you come back, we'll be joined by the management of Mahindra Holidays and Resorts. Stay with us.
Okay, welcome back. We've got the market which has come up, as I was saying. I mean, there was a sharp dip which came through, but unlikely that is, the 35, 40 point higher start was all the bounce there is. There is more there, but will we get it today or perhaps over the next couple of days? We'll see. But for now, it's about 35, 40 points. Sentiment is still fragile, and that likely is the case. And conviction levels, etc., remain pretty low. But that cannot rule out a tactical bounce. 19,322 is where we are at on the Nifty at this point in time. We'll come back to stocks because lots of new stuff is moving and is in the mix now, but in a bit from now. Mahindra Holidays is on our radar now. The company's second quarter earnings performance has been a bit weak despite improvement in the European business. Their profits declined due to lower other income and higher depreciation. Mr. Kavinder Singh is Managing Director and CEO at Mahindra Holidays and Resorts, and he's joining us now to take some questions. Mr. Singh, good morning. Good to have you with us here. Prashant this side, thanks very much for being here on CNBC-TV18. So if we can start by asking you, what was the occupancy in the non-Uttarakhand and Himachal properties in the second quarter? And what are the occupancies tracking at so far in the third quarter?
So if you were to look at the occupancies excluding Uttarakhand and Himachal, we were well above 80%. And as we are looking at quarter three, it's looking very robust. It's a seasonally good quarter. So last year we were at about 84, 85%. We are likely to cross those occupancies as we look into this quarter three.
So, sir, good morning and thanks for joining in. So occupancies are, I think, around 78% right now. As an average, what are we looking at by the end of FY24? What is the average occupancy level that you're going to be clocking?
So, as I mentioned, the occupancies excluding the Uttarakhand and Himachal would have been above 80%. But because of the landslides and heavy rains, we were at about 77% for this quarter. Next quarter, we are looking at about 84, 85%. And for the year, we will be well above 80%. It could be 82 or 83%. And mind you, this is on an increased base because a lot of our new inventory came in quarter four. So we are tracking at much higher number of room nights compared to the last year. So while the occupancy figures would be in the region of 83, 84%, but the number of room nights are growing by already 10 to 12%.
Okay, so what are we looking at in terms of membership additions? In Q2, I think it was just a little under 5,000 members. Is that a quarterly run rate that you hope to maintain for the next few quarters as well?
We are aiming to be much higher than 1,000. I want to mention this to you that this quarter we ended up doing the highest ever member additions in quarter two. We were able to grow our member base on YOY basis by 11%. Our upgrades were up by about 15%, which shows that the members have confidence in our business and they're upgrading their memberships. So overall, member addition story is opening up. It's accelerating. And by the way, I have already mentioned that we have plans to go from 5,000 rooms to 10,000 rooms. in the next 7 years. And pursuant to that, we have 690 keys now which are under construction or expansion at an investment of about 835 crores of capex, which is underway.
Right, got it. So, sorry, you just repeat that room addition, sir. In the last, I think, 2.5 years or so, you've added 1,000+ rooms. What's the plan from here?
So the plan is to go from 5,000 rooms that we have currently at the beginning of FY24 to go up to 10,000 rooms by about FY29, FY30. So in about 6 to 7 years, we want to take it to the double of what we have today.
Okay, and that 5,000 member addition run rate, I remember you telling us that it will happen sometime, next financial year. Do you have a firmer kind of path to that? 5,000 plus every quarter? Yeah.
So we are already tracking around 5,000 in the last 2 quarters. As you may have seen, we are very close to 5,000. Our aim would be to cross 5,000 as we move forward into the next 2 quarters. So we are definitely above the 5,000 run rate in our minds in terms of our preparations and planning. And we are also seeing great momentum in the membership additions in terms of consumer interest. And our new campaigns are also doing extremely well, the marketing campaigns that we have launched during the ICC World Cup.
Okay. You have a large expansion plan, I think overall capex of over 800 crores and 5 projects which are underway, but you also have large cash on your books, which is over 1,170 crores. Is the plan to fund this entire expansion with the internal cash, or would you look to raise some amount of debt?
At this moment of time, the aggressive plans that we have made in terms of building our inventory, we are very confident with the acceleration in the member additions. We will be generating sufficient amount of cash. Just to let you know that last year, we generated around 400 crores, roughly about 400 crores of operating cash. And as we accelerate our member additions, our cash is bound to grow. Even in this quarter, actually, our cash position improved by 40 crores quarter-on-quarter basis. And by the way, parallelly, we have added 53 crores to the deferred revenue. So financially, we are on a very, very good wicket. The debt continues to be at the standalone zero. So therefore, we are very confident of funding our capex through the accelerated member additions and the additional cash that we will keep generating. And you will see much more capital expenditure announcements. As you know that we have signed an MOU with Uttarakhand government for investing 1,000 crores over the next 3 to 4 years. And with many other state governments, the talks are on.
Will the EU business turn around in the second half, sir?
The EU business, specifically based out of Finland, has actually turned around even in this quarter. We faced a little bit of difficulty in the Swedish part of the business, and Swedish economy is not doing too well. So Holiday Club Resorts delivered 1.6 million euro EBITDA. And that is something, given the conditions over there, given the fact that the Russia-Ukraine war is on, the inflation levels are high, consumer sentiment tends to low. But you know what? Finnish people love to have second homes, and they are not able to afford second homes because of the high mortgage rates. So the timeshare sales actually went up by 7% in this quarter.
Any acquisition plans?
We are continuing to scout properties, and primarily in India, to buy so that we can accelerate our room inventory, while we are also buying land parcels and also going to be announcing more projects. I think you know that we announced a greenfield project in Thiog in Himachal. Last quarter, we had announced in Ganpati Phule. So our aim is to get more and more greenfields, expand our existing resorts, and also look at suitable properties for acquisition.
Okay, you were mentioning the European business just a while back, saying that there is a bit of a turnaround in places like Finland. But can you tell me when will the entire business, the EU business, turn around for you in terms of a timeline?
So I think another quarter we should be there, and quarter 3 is generally an okay quarter. Quarter 4 is looking very, very robust, with the Brits, Germans and Dutch already booking their holidays, winter holidays. As you know, winter holidays is a very, very big thing in the Scandinavian part of the world. And also the cost savings are also being, a lot of actions have been put in place. The management over there, working along with the management here, is extremely confident of having a very significant turnaround in Q4.
Okay, all right. We will leave it at that. All the best. And this is, of course, the season is booming at the moment for all of you in this industry. So hopefully that is something that should continue. Well, that's Mahindra Holidays with their future plans for the business. But for the market, it's not too bad, actually. The mid-cap index has recovered, but it's turning out to be very, very volatile. There was that initial dip that we saw on the Nifty. Now there is that recovery. Look at the chart over there, and we are moving to the high point of trade. Mitesh is back with us. Mitesh, how are you approaching this volatile market, and what are the stocks to look at now?
Yeah. So I think this volatility will remain. Basically this still looks like a bounce back to the decline which we saw on Monday, and not only on Monday but a couple of days before that when we started falling from last Tuesday. And typically bounce backs are choppy, and you will see a lot of ups and downs happening during the day. So my idea, since it is to sell on rallies on the index, I would want to see Nifty get closer to about 19,400, 450 zones. That's where I would want to buy into put options. So that's the way we'll approach it. Till then we are, waiting it out. The other option could be the Nifty starts breaking 19,200 and then we go aggressively short. So that's the way we'll take it forward. On the stock side, I have one buy and one sell. Apollo Hospital could be breaking down from a range. So sell here with a stop at 49.75 for a target of 48.50. And UBL is something which did well on Monday as well. Now it's seeing good continuation. So that's a buy with a stop at 16.30 for targets of around 1,700.
Just one, Mitesh, on what's the view on the mid and small cap indices? Briefly, if you can touch upon those. Because they look a little more vulnerable. Go on.
They do. In fact, if you rewind the clock 3-4 weeks back, the mid-cap and the small-cap indices were continuously making new highs, and they were also outperforming a lot. Now, both in terms of price performance and outperformance, both the mid-cap and the small-cap stocks as well as indices had stretched too far from their moving averages, from their mean levels. And I think it's just happening this entire move is happening as a mean correction. So while the Nifty is also corrective, the mid-cap and the small-cap in the short term could correct a bit more, but the long-term picture remains very good. So I would be wanting to buy into the mid-cap and the small-cap names, but not now. I think maybe a week and a half down later. Once the correction or the pullback is over, then we'll look into it.
Okay, all right. Mitesh, thanks a lot for that. Let's focus on some stocks now. Mangalam is tracking Delta Corp, which has seen a bit of a relief rally. Mangalam, over to you.
It is a relief rally indeed for Delta Corp. They told the exchanges that the Goa bench of the Bombay High Court has directed the DGGST of Hyderabad to not pass final orders on the 16,200 crore GST tax notice that had come about in September itself. Remember, for Delta Corp, between September and October, there have been GST demands worth nearly 23,000 odd crores. And the Bombay High Court's Goa bench has said that, the DGGST should not pass final orders without the prior permission of the court itself. The company on its part had earlier indicated that they will pursue all legal remedies to challenge the GST tax demands and related proceedings. Turns out that there could be some relief in that. But however, these issues are long drawn, and we will hear the rest on that. For now, it is a positive and a relief rally on Delta Corp.
Okay, thanks a lot for that. Well, Keval Kiran is the other one that we're looking at this morning. Surbhi is tracking that one for us. Surbhi, over to you.
Thanks so much for that. So Keval Kiran is an apparel company which operates on the brand name Killer, and they have announced their Q2 results, and pretty strong results considering it was a seasonally weak quarter. The revenues were up 16%. The gross profit margin expanded by 130 basis points. The EBITDA is up 23%. Margins are up 140 basis points. That came in at 23.5% versus 22%, and PAT is up 27%. Operationally also pretty strong. The revenue growth has largely come from volume growth as opposed to the value. Volume growth is up 19%. They've sold 38.5 lakh units. The sales realization are slightly lower by 3% on a year-on-year basis at 678 rupees per unit. But overall, strong set of numbers by Keval Kiran.
Oh, Okay, thanks for that. Well, Mahindra Logistics is the other one that we are looking at. Mangalam is tracking that for us. Mangalam, why is that?
You know, the second quarter this time around was weak, largely because the shift that we saw in the festive season into the third quarter, and that's impacted their e-commerce business. That's not all. The global economic environment was not too conducive for the freight rates, and they've seen a bit of a drop as well. All of that has caused weakness in Mahindra Logistics' second quarter performance. The revenues grew by just around 2.9% 1365 crores, but the operating performance was weak. The margins compressed from 5.1% to a little under 4%. The EBITDA was down 21%, and as a result of which, on the bottom line, the company reported a loss of 15.5 crores. This compares with a net profit of 12 crores in the comparable quarter. The company said that there were headwinds in the e-commerce segment, and they expect to see a positive demand uptick in the festive season. So as a result of which, the stock, which was lower, has now ameliorated a little, has recovered a little from the lows. But the question is, what kind of recovery will we see in the third quarter?
Okay, all right. Mangalam, thanks very much for that. 30 points higher, so we're basically around the levels where we've spent bulk of the day so far, which is not much, but 19,300 plus on the Nifty. We'll take a quick commercial break here. When we come back, we put the focus on the commodity segment, and Manisha is going to be here with that in just a bit from now.
Well, shifting focus to the commodity markets now, Manisha Gupta is joining in. Manisha, what's the one commodity you're tracking today?
Well, I'm looking at metals as a sector, which has started the day on a positive note. Well, remember, the last week wasn't so great. And for the month of October, we still are headed for a negative move here. But the prices are firm because the dollar index has come off slightly. There are expectations that China would come out with a stimulus hope. The 1 trillion Chinese yuan of a figure has been doing rounds for some time, with the expectation that China will approve additional sovereign debt issuance there. We did see copper prices decline all the way to 692, but holding around that 700 mark on the MCX markets as well at this point in time. Apart from that, there also is support from the Asian equities, which have started on a positive note. The US earnings were on the stronger side as well, most of them, and that has led to some confidence coming in for metal as a sector there. So overnight, you saw the iron ore prices gain up by almost 3%. Copper gained 1.5% as well. For copper especially, we have seen the inventories market continue to run up on LME and Shanghai collectively. For the month of October, we have seen the stocks gain up by nearly 50%. So for the near term, there is enough stocks in the pipeline. For the further years, for 2026 onwards, markets believe that you could be looking at a deficit. And there are reports from Citi and Saxo Bank suggesting that an all-time high in copper in next 12 months cannot be ruled out. In the meanwhile, when you look at the month of October, as I said, we are headed for a weekly, monthly decline for many of these metals there. Copper, 0.5% on the lower side, aluminum 1.5%, and nearly 3% of a cut is what you are looking at in lead and zinc as well. For the markets, it is going to be the US Fed monetary policy meeting that is in the next week. But ahead of that, it is going to be about the GDP data and also the inflation numbers that come in this week that the street will take cues from.
Okay, thanks a lot for that. Let's slip into a quick break. On the other side, our special segment, it's the economy. Lata will get chatting with Ramani Dati, the CFO at Team Lease Services, and Vijay Sivaram, the CEO at Quest IT Staffing, to discuss the hiring picture across industry. Stay tuned.